Come to IAS 24, related party disclosures. This standard is all about disclosure requirement. This standard will require you to first identify who are the related parties. Step 2, whether we need disclosure. Step 3, what are the disclosures required. Then which entities are exempt from certain disclosures and who are not related parties. Who are not related, that also they have explained. Who is not related party, that also we need to know. What is the concept of related party? The concept of related party is that entities operate through their group entities. Many times transactions may not be at par, at arm's length, not at the market price. That is what you would normally charge to others. You will not charge the same price to the related party. Okay. Sometimes no prices are also charged. Sometimes no prices. Like for example, you may render advertisement service. If there is a common advertisement which benefits subsidiary also, ideally subsidiary should share a portion of that advertisement expense, but all expenses are booked by the parent. Or sometime I have also seen the employee of the parent works in the subsidiary's office. So who is getting the benefit of those services? Subsidiary. And who is paying the bill? Parent. And vice versa also. Subsidiary's employees, they will put in the payroll of subsidiary, so that subsidiary will take the hit of the payroll, but the employee serves in the parent company. Another common transaction is loan transaction. Loan or advance given, which they either don't charge the interest or they may charge below market rate of interest. Subsidiary may do research, and if the product is successful, who does the marketing? The parent. So who enjoys the benefit of that research and development expenditure incurred? The parent. We are not saying that all related party transactions are not at arm's length, but there can be situation where the related party transactions may not be at arm's length. It may be either to benefit one entity or to benefit the other entity. Especially in the group entity, when there is a parent subsidiary relationship, the parent to a large extent influences the subsidiary in its dealings. Then what is the objective of this standard? Why disclosure is required? So when you are a user of a financial statement, and if that financial statement includes related party transactions, then while evaluating the performance, while evaluating the financial position, keep in mind that there are transactions with related parties whose effect has been given in the financial statement. And therefore, the financial statement may not necessarily represent the true and fair view. Is it right? True and fair presentation, especially in the separate financial statement. Maybe in consolidated financial statement, to the large extent, this intra-group transaction gets eliminated. But a separate financial statement is also important. When you go to take the bank loan, maybe the bank will first ask your separate financial statement also. It is ultimately who you are going to make payment to the banker. Is it right? Banker will not catch hold of your subsidiary. So therefore, in separate financial statement, parent will improve its performance. Window dressing, possible? Purchase price 100 rupees, sold at 300 rupees. So they'll book a profit of 200. Many expenses they will shift to the subsidiary. Then practically you'll find subsidiary does the manufacturing, parent does the selling. And parent purchases from subsidiary below the cost. So subsidiary will book the loss, parent will enjoy the gain. And then your question will be, what is the harm if parent or subsidiary, whosoever enjoys the gain? There is a difference. If it is not a 100% subsidiary, Suppose your stake is 60%. There are 40% stakeholder others, they are called NCI. Don't you think their interest is compromised? They will just keep waiting for the subsidiary to pay dividend, but that parent company will not let it happen. Parent will take away all the profit from the subsidiary. So, world over, there is a standard on related parties. Like in India, there is an accounting standard 18 for non-India's compliant company. Then for India's compliant company, there is India's 24. Globally, those countries which follow IFRS, for them, this is IAS 24. Okay. The purpose of disclosure also serves as a deterrence for the management. What did I say? It also serves as a deterrence. What is the spelling? Do you know the meaning of deterrence? You don't know. Okay. Suppose this is my home. Okay. Example. And I have written here, please beware of a dog. You are passing near that road where my house is there. You want to enter my house. But then you see the notice, beware of dog. What will you do? You'll go away. I don't have any dog. Okay. But this notice is really useful to me. Many people who try to come inside my home, they don't come because they think there may be a dog. So when I am asking the companies to report, disclose in the annual report the transaction with related parties, they will be careful while dealing with related parties because then they will have to disclose. Investors are smart nowadays. They can immediately check whether the transaction was at arm's length or not. Right. And then they put lot of uncomfortable question to the management. Management reputation becomes doubtful. Financial statement becomes doubtful. We don't know whether these figures are actually worth reliable or not. Correct? So that is why the standard. And because of this standard, they are careful not to enter into such shady transaction because it will get reported. Bankers will not give you loan if they find there are related party transactions which is not as per the arm's length relationship. What you would otherwise do, you have not done. Investors don't invest in such companies which have a lot of related party deals. So this is the purpose. To a large extent, instead of disclosure, they don't do such transaction only, otherwise they will have to report it. So that is the reason the standard has been there in all the gaps, including this IFRS. Have you understood why related party disclosure chapter is required? Because once you become a shareholder or an investor in future, you will realize how important it is for you to know that the figures which I am looking at, are they reliable or not? In the same paragraph, now we'll see paragraph 2 actually, who is a related party? So this standard says related party can be either of the two. Related party of an entity can be a person. Person means natural person, human being. Or it can be an entity, means artificial person. That is related to the entity that is preparing the financial statement. In determining whether related party relationship exists, the substance of the relationship is considered rather than the legal form. So one has to focus on substance rather than legal form. In legal form, there may not be related party, but sometimes the substance may indicate there is a related party. So what you have to do, understand that the standard wants if there is a party who might influence this company or who might be influenced by this company, then most likely that party will become a related party. Of course, anybody cannot become a related party. There must be some criteria also. Okay, even my customer is someone whom I can influence. Okay, but that does not make the customer a related party. So some criteria are given, but while applying the criteria, apply substance over form. So related party can be people like you and me, individuals, natural person, or it can be another entity which is an artificial person. Like holding company will say subsidiary is my related party. Holding company can also say that the major stakeholder of my company who is holding 70% share in my company is my related party. So person can be related, entity can be related. What is our duty in this chapter? To identify related parties. This chapter is very interesting and sometimes it is very demanding. It will challenge your intelligence in public view today. Okay. That means the institute can give a case study of a complicated business structure, and then you have to identify who are the related party of the reporting entities. And the answer is on the first page and second, third page. I have tried to write in as much detail as I could and see whether it fits into one of these or not. And if it fits into one of these, then it is a related party of the reporting entity. Okay. In the standard, the related party relationship has been given in two paragraphs, which are popularly known as para 9a and 9b. So for this standard, para number is also important, 9a, 9b. 9a is for individual, 9 is for person or what we can call individual, and 9b is for entities. 9b is for entities. Okay. So I am now going to read 9a. In 9a there are 3 points, 1, 2, 3. And in 9b there are 8 points. So 3 plus 8. Your entire chapter will now be based on this 3 plus 8 relationship. Read the problem, see whether it fits into one of these 3 plus 8 situation. If yes, related party. So start. 9a, a common line for all the 3 sub clauses. A person or a close member of that person's family. Now the standard is very wide in terms of its application. Not only person, close member of that person's family is related to a reporting entity. So that means all your close member also will join this list. If Mr. A is holding say 51% share in a company, not only Mr. A will become related party of B, all his close member will become related party of B. So a person or close member of that person family, close member is given in the definition paragraph, so till that time we will wait. Okay. This word close member is defined separately. So wait for some seconds. Is related to reporting entity if that person has control or joint control over the reporting entity. For example, a person holding more than 50% share in the voting power. Okay. Or a person having joint control over an entity. So this point 9a1 is very important. All persons or their close family members will become related party if they control or jointly control another entity. So when you are preparing the B's financial statement, suppose B is the reporting entity then Mr. A is a related party if A controls B and his close family members also. And if suppose C is a reporting entity, C will identify who are the entities who have joint control over me. Suppose Mr. A has a joint control. So Mr. A and all close family members of Mr. A will become related party of C. So they have to make this list first under each paragraph. Under each paragraph, the entity will say who are the persons who are related parties. Is it right? So Mr. A and close members are related party of B and C. So paragraph 9A1 gives importance to control and joint control. Same paragraph again, but now it says person or close family member who is related to reporting entity if that person has significant influence over the reporting entity. Now significant influence means basically generally but not necessarily those who have 20% or more voting power. Now this paragraph will come again, but right now understand this standard says for the definition of control refer IFRS 10. For the definition of joint control refer IFRS 11. And for the definition of significant influence you refer IAS 28. Don't come to me. Already defined. So you have to first apply these standards to check whether there is control, joint control, significant influence. Okay. 20%, if you have studied IAS 28, you will remember, is not a very hard and fast rule. With less than 20% also, if you exercise significant influence, then significant influence is covered. So individuals who have significant influence over reporting entity, like those who are holding 20% or more voting power, but they don't have control or joint control. So who are the related parties? Now suppose B is the reporting entity and B find that Mr. A has significant influence. So identify related party of B under para 9A2, Mr. A, as well as close members of Mr. A family, they will become related parties. 9A3 is a member of the key management personnel of the reporting entity or of the parent of the reporting entity. So this standard is very wide in the scope. It also includes the KMP of the parent of the reporting entity as related party. Why? Suppose there is a Mr. A who is a key management personnel B Limited of B. So then he'll become related party. Why KMPs are given so much importance in this chapter? Because these are the key decision makers. Okay. If somebody comes, some vendor comes and he says, sir, please buy from me. Then the MD will say to his purchase manager, you please purchase from this vendor. I instruct you. What will purchase manager say? Okay. No, he will say, no, there are other vendors who supply cheaper. Can he say that? He will say, but then what MD will say? Whatever I say, you please listen to that. Okay. Otherwise, your next promotion will be withheld. Your next salary incremental will be after 5 years. Okay. And you will be transferred to the stores. They will not say it officially, but then the purchase manager will understand what will happen if he does not obey to the MD. Right? He may be shifted to a subsidiary which may be located in a Naxalite area. That is just an extreme example. But then, yes, if the boss says normally the juniors don't disobey, knowingly that this may not be the correct position, like in your offices. You know that this client has made some goof up, but the boss says, okay, I'll take care, you go to another audit. The moment the article start making noise, he shifted to some other audit. Okay. Or his area of audit is shifted. Has it ever happened? No. It will happen very soon once you qualify. We don't like people who disturb. Now we'll come back to this discussion again. My question is, why the parent of B Limited, MD of parent of B Limited is also a related party of B. You are preparing financial statement of B. B is RE, reporting entity. Now suppose there is some Mr. Sanjay Kumar who is an MD of parent of B. Will he be a related party of B? Yes, as per the definition, yes. But why they have put a CEO, CFO, MD of a parent company as a related party of subsidiary? Because again, parent is the boss of subsidiary. MD is the boss of parent company. So of course this MD can direct this subsidiary. Is it right? So the standard setter knows that the order may come not only from Mr. A, who is a direct boss, the order can also come from the boss of the boss. Is it right? So therefore we will get influenced. Report that also. So this completes my first part, that is person. So in persons who are covered, control, joint control, significant influence, key management personnel of reporting entity and parent entity. Right? Now this para 9a has a role in para 9b also. So that makes it little complicated. So now who are the related parties? Which entities are related parties? So for that there is a popular paragraph number called 9b, and there are 8 related party relationships here. First is the easier one. An entity is related to reporting entity if any of the following conditions apply. So 9b1, the entity and reporting entity are members of the same group. And what is group here? Group means parent, subsidiary and fellow subsidiary. So what is not included in the group? Associate and joint venture. So suppose this is a group example, H Limited. It has a subsidiary S1, S2. S1 has a subsidiary S3. S2 has a subsidiary S4. And for theoretical discussion, S4 also has a subsidiary S5. In some countries, so much chain is not allowed. But IFRS is a global standard. So therefore, these 3 layers of chain holding is possible in some countries. So who are the related parties of H? Direct subsidiaries, indirect subsidiaries. Who are the related party of S1? H and subsidiary and fellow subsidiaries. This will be called fellow subsidiary. That means those who have common parent company. Ultimately, H is the parent company of all the subsidiary. So all those companies which have common parent company, they are called subsidiaries, fellow subsidiaries. So they will also become related party. So each of them will treat the remaining others as related party. Then how about the disclosures? That we'll discuss later. But first you make a list of related parties. Is it right? Under each clause. Second one, little more complicated. 9b2. One entity is an associate or joint venture of the other entity. One entity is an associate or joint venture of other entity, or an associate or joint venture of a member of a group of which the other entity is a member. My God. To read also is such a intelligence task. Or an associate or joint venture of a member of a group of which the other entity is a member. So first I'll read the simple one. This is your case 1, right there, case 1. Case 1 is simple. H Limited is a company. It has an associate A Limited. Then A Limited is related party of H. A Limited is a related party of H because it's an associate. Or second example, H Limited has a joint control over JV. So JV is a related party of H. Now we'll come here. H Limited has two subsidiaries, S1 and S2, one associate, one joint ventures. Subsidiary 1 has one associate A2, one joint venture JV2. S2 has an associate A3 and a joint venture JV3. Under clause 9B2, we're not discussing other clauses right now. 9B2, now my question is whether A2 will be a related party of H. JV2 will be a related party of H. A3, JV3 will also be a related party of H. Similarly, for S1, A1, JV1, A3, JV3 will become related party of S1. So can they simply write like this? All the associates and joint venture of the group entities are also the associate and joint venture of the other group entities. Is it right? So A1, A2, A3, J1, J2, J3 means joint venture are related party of H, S1, S2. For the time being, A1, A2, A3 are not related to each other. Okay. Associates will not automatically become related to each other. So write down this note there. I think I have written, don't worry. A1, A2, A3 will not become related party of each other, or J1, J2, J3 will not become related parties of each other. But again, there are some more complication coming soon. At least this part is simple, that for a parent company and for subsidiary company, the associate and joint venture of other group members will also become related parties. Now paragraph 9b3, both entities are joint ventures of the same third party. See the diagram, both entities are joint venture of the same third party. H Limited has a joint control over JV1. H Limited has a joint control over JV2. Question is whether JV1 and JV2 are also related party? Yes. The standard specifically says that both joint ventures will become related parties of each other. They are also related parties of each other because they have a common venturer. And the reason again is same here. This venturer has a joint control over both. So they can influence both the companies in their dealings. They can direct the relevant activities of J1. He can direct the relevant activities of JV2. And they can force J1, J2 to enter into certain transactions. Another very good situation, 9b4. One entity is a joint venture of a third party and the other is an associate of the third party. Now for A Limited, JV is a related party because JV is the entity over which H has joint control and H has significant influence over you. For JV, A Limited becomes a related party. For JV, A Limited becomes related party because H Limited jointly controls JV and has exercised significant influence over A. Now, why this kind of relationship is also brought into discussion? He has a joint control over it. So now in this standard, one more thing is that whenever there is a joint control or control relationship, and if you are somewhere connected there, then you also become related parties there because H has joint control. It can ask JV to enter into transaction with A. Correct? So they will be influenced by each other through H Limited. So therefore this is also covered. Now remember, if H Limited has two associates, this situation is not a related party because you only have significant influence. So co-associates are not related parties because H here just has significant influence. It does not have control or joint control. So therefore it can't really force them, direct them to enter into any transaction. It may influence but not direct, whereas control or joint control give rise to related party. So some minutes before I had drawn one diagram here. Now if we look at this diagram, A1 and JV1 has a common investor H. So A1 and JV1 will become related parties under this clause. And similarly A2, JV2 will become related party because S1 is common there. A3, JV3 will become related party because S2 is there. Okay. But not under clause 2, but under clause number 4. Now we will continue tomorrow.